One of the most significant budget line items for any HVAC company is insurance. And insurance comes in many forms. There's health insurance, there's property casualty insurance, sometimes referred to as liability insurance, and there's workman's compensation insurance. And regardless of the fact that insurance is one of the largest expenses that any HVAC contractor has, it's not taken seriously enough. Many of the contractors and firms that I've had a chance to work with don't pay nearly enough attention to their insurance costs. They take a hands-off approach to it. They figure insurance is a necessary evil, something that I'm required to have. I know it's going to be incredibly expensive, but my broker's a good guy, so hopefully he has my best interests in mind. And while a thorough analysis of any comprehensive insurance platform requires scrutiny at every level, there are a couple of things that I'd like to talk about today that are very quick and easy for you to look at to make sure that you're not being taken advantage of. And I like to call these areas hidden costs. The first area of hidden costs that I'd like to discuss are rating errors. Now, it's a lot more expensive to insure an installer or a service technician, people who are crawling around in attics, up in crawl spaces, working with their hands and their backs, maybe going up on the roof, than it is employees who report to the office every day, sit at a desk and answer the telephone. And that's the way that it should be. Unfortunately, in almost every policy that I've had a chance to look at, employees are classified incorrectly, and usually classified in the wrong direction, which ends up costing the contractor significant money. So take a look at your policy and make sure that all of your employees are classified correctly. The second area of hidden costs that I'd like to discuss are claims. Naturally, your insurance premiums are determined by how many claims you've had. Take a minute and make sure that the claims that are on what they call your loss run, or your report the insurance company uses to determine what your premiums are going to be, are both timely and accurate. All the time I see examples of claims that should have dropped off a long time ago. I've even seen claims attributed to companies that weren't even their claims to begin with. They were simply appropriated them incorrectly, and they were being charged for an employee that was never on their payroll. Another thing that's definitely worth taking a minute to make sure is correct in your policy. The final area that I'd like to discuss today is in the area of third-party information, specifically your experience modification factor, or MOD. The MOD is something that's determined by an outfit called the National Council on Compensation Insurance, or NCCI. And the NCCI receives data from your insurance company with regard to how many losses you've had, how many accidents, how much lost time, how many dollars has the insurance company had to pay on your behalf, and all of these things contribute to the modification factor. And the larger the MOD, the more money you're going to pay. It's as simple as that. So everything that contributes to the MOD is extremely important. So again, look over your loss runs, make sure that every accident, every loss, every dollar spent is in fact yours, and it's timely, meaning that it shouldn't have dropped off over a period of time a long time ago. Taking a look at just these couple of simple things can help you save a great amount of money on your insurance program.